Markets are soaring higher today. Tesla stock, not so much. There's some news that is weighing on Tesla today, but I really don't think it's that important nor impactful at all. And if you want my honest opinion, it looks like Tesla's stock is preparing to break out from here. Now today you're actually seeing Guggenheim that adjust their Tesla price target from $134 per share to $153 per share. That's actually a Tesla price target increase. But as you can see here, Tesla sees some lower estimates on Q3 deliveries and EPS roll in. Canaccord analysts cut their estimate to 469,200 vehicles from a prior estimate of 480,000 vehicles. Meanwhile, Guggenheim forecasts Q3 deliveries of 456,000 vehicles. The consensus estimate for Q3 deliveries is now 459,000 vehicles. For perspective, Tesla delivered 443,956 vehicles in Q2 and 435,059 vehicles in Q3 a year ago. So you are going to have year-over-year growth. Some firms have also lowered their Q3 EPS estimates on Tesla to adjust for even more aggressive pricing in certain markets. In China, Tesla has seen sales momentum pick up, although the company has been subsidizing interest rates down to 0%. The consensus Q3 EPS estimate from analysts has been trimmed to 61 cents. It is also being reported that GM and Hyundai said today that they are working on creating a joint venture that could be worth tens of billions of dollars to co-develop electric vehicles. So Wall Street may be seeing some competition for Tesla, even though I don't think that's realistic. But the biggest news of all today is actually this. Uber and Waymo expand their partnership to bring autonomous ride-hailing to Austin and Atlanta. Today, Uber Technologies and Waymo announced an expansion of their existing partnership to make the Waymo driver available to more people via Uber. Beginning in early 2025, Waymo and Uber will bring autonomous ride-hailing to Austin and Atlanta only on the Uber app. In these cities, Uber will manage and dispatch a fleet of Waymo fully autonomous, all-electric Jaguar I-Pace vehicles that will grow to hundreds over time. Riders who request an Uber X, Uber Green, Uber Comfort, or Uber Comfort Electric may be matched with the Uber for qualifying trips. And I think Wall Street may be looking at this partnership and saying this could be a missed opportunity for Tesla, or perhaps there's growing competition in this area as well. Although I think we all understand that Tesla is creating something that will be far superior to Waymo. When that moment does come that Tesla vehicles are fully autonomous, you could go to sleep in the car, take your hands off the wheel, do homework or work from the car, do whatever you want to do. Fully autonomous vehicles, Tesla will be able to launch basically everywhere at the same time. Now, yes, there will be regulatory hurdles. There will be issues that Tesla will have to face clearly on the regulatory side. So is this really competition? I don't think so. That's kind of how Wall Street is looking at this today, that Tesla is getting further behind the curve, when in all reality, I don't even think there's much of a curve at this point. Fully autonomous ride-hailing vehicles is such a new concept, they're barely available to a sliver of the fraction of the US population. The way that I actually look at this is that it's good news. I want to see as many people as possible get access to fully autonomous, ride-hailing services. Because if people have used, let's say, a Waymo before in Atlanta, when Tesla launches the robotaxi network in Atlanta, there's going to be more people that are willing to try it and give Tesla the benefit of the doubt. And this market is so big, or at least it will be so big once we have full self-driving, regulatory approvals, that I think Tesla and Waymo can be successful. I don't think it's just going to be Tesla that operates robotaxis, and I don't think it's just going to be Waymo. You're going to have both companies that are successful in their own respective rights. And much the same way, if Tesla was the one partnering with Uber, that would also be positive for Waymo. So Waymo partnering with Uber is positive for Tesla. Wall Street doesn't look at it like that. but that's the reality of the situation. So instead of this news actually being seen as negative today for Tesla, I actually think we should be looking at this as a positive for Tesla, as crazy as that sounds. I mean, after all, it's not like Apple and Android where there's brand loyalty here. There's no brand loyalty to Waymo. There's just not. But indeed, as I mentioned at the start of this video, markets are actually soaring today. The RSP, which is the equal weight S&P, is up almost 1% today. The S&P, the SPY, is up about 0.5%. So you're actually seeing the markets having a pretty broad-based rally today. The Russell 2000 is the main shiner today, up about 2.1%. 4x outpacing the Nasdaq, 4x outpacing the S&P, not as much with the Dow. The Dow is up 0.71%, but that makes perfect sense why the Dow and the Russell 2000 are outperforming as we are heading for the first Fed rate cut coming next week. Part of this snap back to reality, price in the first Fed rate cut, something we were not even doing yesterday with big tech outperforming. Like, big tech should not outperform if we're heading for the first Fed rate cut and a soft landing, okay? Big tech outperforms if recession fears start to rise. If it looks like there could be a Fed error because big tech is seen as the defensive, the recessionary trade, if you will. So actually what we're seeing today in markets is healthy. It's exactly what I would expect to see. Now, the odds of a 50 basis point rate cut are jumping a lot today. So currently, there's 42% odds of a 50 basis point rate cut and 58% odds of a 25 basis point rate cut. And there's a couple different reasons for this. We will talk about this more in the next video, so stay tuned to the channel. But for those of you guys listening now, here's what's going on. Former New York Federal Reserve President Bill Dudley expressed support for a 50 basis point interest rate cut, Reuters reported on Friday. Speaking at the Bretton Woods Committee's annual Future of Finance Forum in Singapore, Dudley said, quote, "I think there's a strong case for 50, whether they're going to do it or not." Dudley pointed out that the current rates are around 150 to 200 basis points above the neutral rate, where monetary policy is neither restrictive nor accommodative. Dudley had previously advocated for rate cuts beginning in July. Jim Bianco's post over here on X says Nick Timmerhaus's stories have really swayed the voting markets in the past, whether it was for Fed hikes or Fed cuts like in 2019. But this time around, Nick Timmerhaus' story that came out yesterday, well, took the certainty of a 25 basis point cut and made it uncertain that we could get a 50 basis point cut instead. And that's what has really prompted up your betting markets for a 50 basis point cut. In fact, yesterday, the odds of a 50 basis point rate cut were 14%. Now, they're over 40%. And it was this story here, titled "The Fed's Rate Cut Dilemma, Start Big or Small" by Nick Timmerhaus, that started this repricing in of what could be 50 basis point rate cut. Now, we will talk about this a little bit more in the next video. Clearly, I think this is a topic that needs to be expunged on a lot more, but that's kind of the breakdown of what's pushing on markets today. We did also have Michigan consumer sentiment that did come in better than expected today at 69.0. Estimates were 68, so that's great. 5-year ahead inflation expectations came in at 3.1%. We were expecting 3%, and they've been pretty just level at 3%, so that was actually an uptick. Consumer expectations came in at 73.0. The estimate was 71, so that came in better as well. Michigan current conditions came in at 62.9. The estimate was 61.5, so that was better than expected as well. And Michigan inflation expectations for the 1-year period ahead came in at 2.7%, lower than the estimate of 2.8%. So 5-year inflation expectations came in bad. 1-year inflation expectations came in good. Consumer expectations and current conditions came in good. I would say this data today was a net positive, but again, those 5-year inflation expectations going up is not a positive. Now, tonight we are going to get industrial production, retail sales, fixed asset fixed asset investment, the unemployment rate, as well as an NBS press conference coming out from China at 10 p.m. tonight, and that could be important considering Chinese stocks have fallen to their lowest prices since January of 2019. The Chinese stock market has basically been collapsing in recent months, and if their data gets even worse, I could see that starting to have an effect on our markets. And this carnage in China has still been happening even though China has banned short selling and negative brokerage reports, and it's not letting up. I guess that's the power of deflation. Careful what you wish for, because China's been in deflation for the past 5 quarters. I know a lot of people think deflation would be great over in America or in Europe or another developed market, but deflation is worse than inflation. So let's hope we do not see deflation in the coming months. In other Tesla stock news today, S&P Global Mobility says Tesla delivered 5,175 Cybertrucks in July, up 61% month over month, while other EV pickups combined sold just 5,546 units during the same period. So the Cybertruck almost outsold all other EV trucks combined. That's crazy. We are getting a first look at the North Hollywood showroom and service center that is opening soon. This used to be a Kmart that presumably has long been shut down. In other really big news today, Tesla has introduced a new promotion in the US for the Model Y and the Model 3 with $0 due at signing, with a 2.49% finance rate for 36 to 72 month loans, which I know a lot of people have criticized Tesla really just doing whatever they have to do to get people in cars. This is another step towards that, because clearly people don't have thousands of dollars to put down on a new vehicle. They may be able to make the monthly payments, but a lot of people literally live paycheck to paycheck. They probably don't have, $5,000 to put down on the vehicle. So this is another attempt from Tesla to get more people into new Teslas, which honestly, I've heard zero due at signing for all of my life in different GM, Ford, or Stellantis ads. So it's not an uncommon thing to do. It's actually uncommon that Tesla has not been doing this, because their competition has been. Now, as the Fed starts to reduce rates, as rates go lower, this should be very margin accretive for Tesla, because Tesla is going to buy down less of the interest rate. Imagine now Tesla's perhaps buying down 3% of the interest rate as the Fed cuts rates, let's say 50 basis points if they decide to do that. Then Tesla only has to buy down 2.5% of the interest rate. Tesla's going to save more money, and that's going to help shareholders, and hopefully in the process of the Fed cutting rates, help more people be able to buy a Tesla. We do see $85 million worth of Cybertrucks that are spotted at Tesla's Giga Texas factory today. Rivian pushes the R1T powered tonneau cover retrofit to 2025. And if we take a look at StockTwits, sentiment for Tesla today is bullish at 57. Yesterday it was extremely bullish at 76. Message volume today is normal at 53. Yesterday it was high at 55. And the participation ratio today is high at 55 as well. Option activity in Tesla stock today is more on the positive side. You have seen 18 different trades totaling $5.18 million with a positive order value of 67%. Volume today is 63.32% to the call side and 36.68% to the put side. Tesla's short interest of free float continues to fall, now down to 2.84%. You have $18.12 billion currently sold short in Tesla stock, totaling 78.85 million shares. You can see today return shares 418,000 and borrowed shares of 108,000. So it looks like about 310,000 shares at minimum today are actually being covered on. Google Trends data has been plateauing for the Tesla lineup for a while now. The Cybertruck at 49, the Model Y at 22, the Model 3 at 21, the Model S at 9, the Model X at 8. I do think with this latest promotion, this $0 do it signing promotion, you're probably going to see trend interest pick up quite a bit over on Google Trends. And this is something I'll be watching for as we are rounding out the end of Q3. Global inventory numbers for the Model Y are moving upwards a little bit, but really just staying in this range of about 6,000. The Model 3 falling to 4,600, the Model X down to about 3,700, and the Model S down to about 2,500. Tesla continues to run about 4,000 different ads with Google. We can see the percent of stocks currently trading above the 50-day moving average as having a big day today. Again, as you're getting that outperformance of the Russell 2000 and outperformance of the equal weight S&P, that's definitely going to have a positive impact to the internals, the market breadth in our markets. You do have 6.85% of stocks that are trading above the 50-day moving average today when they were not yesterday. So almost 7% of stocks, all stocks, are breaking above their 50-day moving average. That's impressive. You're currently sitting at about 56% of stocks above their 50-day moving average. That's getting better. That's not super strong. That's also not super weak either. So there's really room in both directions here. The 2 and 10-year yield curve inversion is uninverting pretty rapidly today by about 3 basis points. You are now uninverted 7 basis points total, and this is now a week of being uninverted and not inverting during this whole past week. This is getting pretty crazy. It looks like it could be official that we're finally going to stay uninverted. And now, we'll talk about what this means in the next video. This could be a sell the news event coming next week that I think you need to know about. And yes, we're talking about the Fed meeting. The implications of 25 basis points or 50 basis points is probably the most important aspect of whether or not the markets do sell the news or buy the news and see an even more aggressive upside rally, which would stand to benefit Tesla stock a lot. Now, here to conclude this video, Tesla stock is up about 0.2% today. You do have this short-term cup and handle formation. It looks like you are fully formed, ready to break out to the upside. So looking at Tesla stock specifically, I would not be betting on a downside move for Tesla, especially if we can close above 230. Yeah. We are looking primed for a move into the 250s or the 260s at the bare minimum. But next week's events, I think, will heavily impact Tesla stock. And I think that's why you probably need to hear the next video coming out at 8 p.m. Eastern Standard Time tonight. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.